Hello, and welcome back to Curious About Bitcoin. I'm your host, Brian Rothenberg. Today, I wanted to do another video on Bitcoin treasury companies, specifically the blockchain group in France. And one of the things that the blockchain group has done that's been innovative in this space is that they've issued bonds, convertible bonds, denominated in Bitcoin. And so I had a question from a friend about how this works and why this is accretive. There are prominent Bitcoiners, including Adam Back, who has participated in this strategy at this particular company and has said that it's really sort of a valuable tool in their tool chest. That said, no disrespect to Adam because I agree with everything that I just said that he previously said on X. He is an insider in terms of utilizing this strategy for his own benefits. So it takes a careful look. We need to do our own research to make sure that if we as common shareholders are buying into this stock, that we're also getting value out of them using this strategy. And I absolutely believe that we are here. And so what I wanted to do today is basically run through an example here to talk about how these convertible Bitcoin bonds are used. Now, before I jump into that, I will say that each of the three, at least in my mind, leading Bitcoin treasury companies, and that would be Strategy in the US, that would be Metaplanet in Japan, and the blockchain group in France, are utilizing unique aspects of their markets to accrete more value, more Bitcoin yield to their shareholders. For Strategy in the US, that's the use of their new preferred share classes, Strife, and Stride. And with those, basically, they get to have a little bit more control and they don't have to dilute their shareholders using at the market share conversions, dilutions, or share sales to accrete more Bitcoin. Previously, they were using convertible bonds denominated in dollars, and they've moved away from that because they're getting more basically yield out of these other products. I won't go into more detail on this particular video about that, but that's the tool that Strategy is using that I think is really, really effective. In Japan, Metaplanet is doing two unique things. One is they're using moving strike warrants to basically do an equivalent to an ATM. But one of the things that they did with their new plan that was released last week is they said, hey, we're going to be doing these moving strike warrants based on yesterday's price, but they're going to be issued at a premium to yesterday's price at 101, 102, or 103% of yesterday's price, which is pretty nifty because that, again, is going to mean that you're going to issue more shares at a higher price, which means that you get more dollars, or in that case, yen in the door, and you're able to buy even more Bitcoin that way. The other thing that they're doing that's really unique is that they are writing put options on, their stock, I believe it is, and or maybe it's the price of Bitcoin, but they're writing put options and gaining value from that. And basically, if the value of their stock increases or does the value of Bitcoin, then, they get that value. And if it decreases, the put options kind of protect them. I'm going to be the first to admit that I am not an options expert, so I'm going to have to do a little bit more research to try to explain that better. But just overall, what I'm trying to emphasize is each of these companies has a unique strategy. And the one that I'm trying to go over today is these Bitcoin denominated convertible bonds that are being issued by the blockchain group. And so what I'm going to do is start by sharing my screen. And I'm going to begin with the example of what would a convertible bond look like if it was denominated just in euros. So what is the value? What is the Bitcoin? All of that kind of thing. But these are not the Bitcoin denominated bonds that the blockchain group is actually using. This is basically trying to give us an equivalent. So in their last press release for their last Bitcoin convertible bond, they used the Bitcoin price of 100,000 euros at the time. So we're going to use that. They used their stock price at the time of 2.93 euros. And so we're going to use that. And then I got the share count from an X post online that was updated today. I don't know if that was accurate at the time, but these numbers specifically don't matter as much so long as we carry over them the same way in the example to show how the Bitcoin bonds are working. And that's the point of this. But they should be rather close to where we are. So please forgive me if any of them are off specifically. Now, what they did in their last press release for one of their tranches, and this was a smaller tranche, was a 5 million euro Bitcoin convertible bond. So I did the same thing, basically denominated in euros. The convertible share price is 30% higher than the day's stock price. So that would be €3.81. This is in that document, which I will link in the show notes. And that means that if they were to have to convert to shares, it would be 1.3 million shares. And just to do the quick math for you all, if they converted at today's price or the price that day, it would be 1.7 million shares. So 400,000 shares additionally that would have to be converted that aren't, because they're pricing these bonds at a premium. Now, that's nothing new. Strategy has priced their bonds at a premium, I think between 30 and 50%, depending on which of the convertible bonds it was. Those were denominated in dollars, but so far we're just standing pat in terms of the strategy and everything that's working. Now, the Bitcoin added here, I did not take out the interest on the debt. I'm not sure if you should, or if you're going to fully convert that into Bitcoin immediately. I just fully converted that into Bitcoin immediately. I took the 5 million euros divided by 100,000 euros for the Bitcoin price of the day, assuming they were going to smash by that day and get it deployed, and that would be 50 Bitcoin added. Now, one of the other things that I will mention is the press release did say that 95% of the funds would be used to buy Bitcoin and 5% would be for administrative expenses and whatnot. I just made that irrelevant for the sake of this example and the numbers that we're running here. But that is an important piece to know that I didn't want to overlook. The next thing that I did is I basically said, well, how many sats per share are we going to get if we take 50 Bitcoin and we divide by the 305 million shares roughly that we have, and then we multiply by 100 million sats in one Bitcoin, you're going to get 16 sats accreted per share. So that's basically the Bitcoin yield from this particular bond issuance. We don't have to add these convertible shares in yet because they haven't been converted. So we get this now, we get this 16 sats this quarter immediately, and the conversion will be later on down the road. I put in a coupon rate here. Basically, I went back into the history and I found all the strategies coupon rates, and the highest one I saw was 2.25%. I think that if the blockchain group was having to issue these bonds, they would have to pay at least that much, maybe even double there. But we'll just keep it at 2.25% to say that there is a coupon rate when you're doing a euro or dollar-backed convertible bond if you are a smaller company. I didn't look them up, but I believe Semler Scientific in the US has also done some convertible bonds, so we could go back and look at the percentages they had, because they would have been doing that at a smaller number than the amount of capital and Bitcoin that Strategy had last year when they were doing convertible bonds in some of the things that I saw. So that would mean that over 5 years, the interest on the debt would be 562,500 euros. That's something that they would have to carry on their balance sheet as debt, in addition to the 5 million euro debt that they will have an obligation for. So the total debt on their balance sheet, assuming no other debt, it would basically be taking these two numbers there and dividing it by the total market cap, assuming everything else was equity and not debt, which again, I'm just trying to make the numbers easy here, gives us that 0.62%, which will be compared to what happens with the Bitcoin-denominated bonds in just a moment. And then if they had to return the capital, basically they're going to borrow 5 million euros, and it's going to cost them 5.5 million euros by the time they're done if we don't convert into shares at €3.81. So if the share price goes down to $2 and stays at $2 for the full 5-year term, and these are 5-year convertible bonds, both that Strategy has issued that I'm using for this mock example here. If it was €2 for the rest of time until the end of the 5 years, they would have had to pay this interest on the borrowed money. And so the total that they'd have to pay back, they'd have to give this money back as well at the end. So that's 5.5 million euros that they'd have to pay. Now, the next thing that I want to do is share a different screen for us. And what that's going to be is an interview or a discussion on X that happened today with the deputy CEO of the blockchain group. And his name is Alexandre Lizette, and I've heard him speak a number of times. He's very knowledgeable in this space. And basically what we're going to see there is his discussion specifically of the Bitcoin-denominated bonds. And it's about 3 or 4 minutes of him speaking here, so I want to play that in full and help us out to kind of see that. So let me start playing that now.
I want to add something related to this question and to the question of that you asked before, Nea, in terms of differentiation I think that's something that's extremely unique, and that you, Enea, Bidemoon, and the community has done an amazing job at also explaining, is the uniqueness of our strategy in terms of Bitcoin-denominated convertible bond out of the Luxembourg nuclear reactor SPV that we have set up, and that allows us to infinitely scale the type of capital raise we can do through the Bitcoin-denominated convertible bond, as those convertible notes are subscribed directly into Bitcoin and are denominated in Bitcoin in a way that on a 5-year maturity, the risk is extremely low to not have conversion, and so that there is no credit risk added to the balance sheet, in a way that we could have tomorrow, as Bidemoon said, we could have tomorrow one investor that would want to come with 100 million, 1 billion, and we would be in a position to allow him to join, provided that it doesn't exceed 50% in terms of potential dilution into ownership of the share. But that's an extremely scalable financial instrument to convert premium into net asset value at record pace. And that's how, in part, we've been able to provide record 1,000+% BTC yield year to date. And of course, that's a financial instrument that is not even existing elsewhere. And so that's basically the only solution today for Bitcoin maximalists and major institutions in terms of family offices, multifamily offices. You could even think of sovereign funds and so on that have Bitcoin on the balance sheet on their own investment, and that would be able to get the best of Bitcoin. If the company fails, the investor gets back the Bitcoin. But if we continue to execute the plan, if we continue the growth, and if we don't fail, then the conversion is the most likely scenario, as we are providing BTC yield. Bitcoin could even stay flat, and we would be able to convert if we provide BTC yield over time. And even with the BTC continuing to grow even at much lower pace than historically, just with fiat devaluation, then it's extremely likely that we will convert all of those BTC-denominated debts. And in any case, we have no credit risk on them, so it's less risky for the investor, less risky for the company, more scalable for the company. It's maximizing BTC yield for the company. We don't even need MNAV premium to generate BTC yield, as we are issuing those at a 30% premium to 20-day moving average, or more potentially. And so that's an extremely scalable, extremely yield maximizing instrument that we have innovated as the world first instrument of this kind. And that's the instrument that Adam Back, Fulgor Ventures, Tobam, UTXO Management, and Ludovic Chechin-Laurent have subscribed back in March, and also with many of them subscribed in tranche 2 a few weeks ago. So that's also a factor of huge differentiation, and that's a factor of major premium generation and future BTC yield capacity for the company, as those BTC-denominated debts are long only. The investors that subscribe to these instruments are not shorting the stock on the other side. They are long only. They are Bitcoin maximalists. And that's extremely accretive, of course, for the stock. Since the launch of the BTC-denominated convertible notes of March, the stock is up 1,000%. So, I mean, if we speak about conversion probability, this is as close as you can get to permanent capital. And so that is quite a differentiating factor. And that's something that is blowing the minds of traditional finance people that don't yet understand Bitcoin.
So I'm going to leave that there and go back to the next spreadsheet that I have that I want to share with you all. So if you bear with me for just another moment, I will pull that back up. And so here, what I did is I put together an example, and I'm just going to make this slightly smaller so we can hopefully get most of it onto the same page here. But basically, what I was attempting to do was do the comparison of what it looked like with a convertible euro bond versus a convertible Bitcoin bond. And the numbers that I used here were the exact numbers that basically the blockchain group used. And here, this should just be a number, so I'm just going to make it automatic, but everything else should be pretty much correct other than the sats per share and things like that there. And I'll fix those just so that we know that we're dealing with the right things. But basically, you know, $100,000 price, same number of shares, and actually those shouldn't have euros either. Sorry about that for everyone there. And to now make it have some commas, but I should leave this stuff alone. Same market caps, but we're doing a Bitcoin denominated bond. We do need to have the euro equivalent listed, and they do list that in their press releases. The convertible share price is at €3.81. That's why we need this 5 million euros there to get to basically the convertible share number, exactly the same as we had over here. So far, exactly the same. The Bitcoin added here would be 50. The number of sats per share is going to be pretty much exactly the same, especially if I, convert that there. The coupon rate should be in percentages, and I showed you before it was 2.25%, but now it's 0%, and that's what they did issue, mainly because there's no risk for the Bitcoin holders. They can put in one Bitcoin, and then at the end of this, if they don't want to convert to shares or the share price wasn't there, they can get back one Bitcoin. And the interest on the debt as a result is going to be €0. The principal debt carried on the balance sheet is 5 million euros. So what they would have to do to pay back the capital is they'd have to do 5 million euros there. Now, what this means is on the balance sheet, 0.62% and 0.56%, they're carrying 10% less debt on their balance sheet as a result of denominating in Bitcoin and not having the coupon rates there. Now, if you can get 0% coupon rates here, then that's going to go down to zero, obviously, but I don't know that that's going to be that easy for a company like this. Strategy was several times, I think it was at least 20 or more times bigger than the size of the blockchain group when they were getting zero coupon bonds. Now, what's interesting is in the press release, again, I'm going to put everything that I've shown here today in the notes to this video. They also have basically a second round or a second tranche of this Bitcoin denominated debt. And so, sorry, I got to do some changes here, but basically what they had was if after this one is fully used up, we want to do another one, we can issue another 7.5 million euros. The convertible share price would be at a 30% premium to this convertible share price. And that's actually something else that I forgot to mention that I want to go back to. So if you look up here, I've got this €4.95 listed here. And basically, this is when people can convert. And basically, the rules are that the bondholder themselves, so the person who gives up the Bitcoin, can convert for the first 3 years. If at any point in time the shares trade at €4.95 for 20 days at the volume weighted average, which is a 30% premium to the convertible share price. Now, they're not going to convert at this price. They're going to convert at this price, but they're only going to convert when the stock is higher than that price, which is also going to be beneficial for all of the other common shareholders and everything like that. And so, sorry, I'll make this a little bit bigger so you see the rest of the words there. Same thing down here, but basically this is going to be a 30% convertible price based off of the increase on this with a 30% premium again. So you can see we're going from €4.95 to €6.44 with the same rules there. Same 3 years, and then between years 3 and 5, either party can elect to convert if this price is reached. Same thing up here. And so, same coupon rates and everything like that. The number of Bitcoin added, this is inaccurate because I'm using the the wrong figures here, but basically it would be 75 Bitcoin again. Apologize for this as I'm going through, but everything else should be, very, very similar. I didn't have the sats per share down here, but we're going to dilute some shares in the meantime, so not so important. But you can kind of see where all of these things are creating a little bit more value. And I'm just going to delete that for now. But basically, we're holding debt on the balance sheet in the exact amount of the bond compared to having to carry the additional interest expense if we had a coupon rate on those. If we have to give everything back, the return of capital would be the exact amount borrowed, and it would have no currency risk, right? What if, there was deflation in the euro during this time? Basically, the blockchain group, if they did euro denominated bonds, would have to take that risk. Now, those of you who are watching this video probably don't think that that's going to happen, as I don't think that that's going to happen, but there are those risks there, right? As you're going back. What if, we're in a Bitcoin bear market and the value of Bitcoin went down and you had to sell the Bitcoin to pay back the interest on the debt or to pay back the return of capital? Again, something that these companies will probably not consider. But after a while, if you can't, put more shares out into the marketplace because the MNAV is too low, basically you will not be able to put more convertible bond out there because you're not going to be allowed to borrow from Peter and pay Paul because they're going to see through that. So this is a very safe method there. They would still potentially have to return the $5 million, the 50 Bitcoin, or the 5 million euros, 50 Bitcoin. But remember, in that instance, if they were returning the Bitcoin to the people who held the bonds, Bitcoin would be worth less than it is today in all likelihood. We would not have seen price appreciation because the company could have converted in that instance there. And the other really cool thing that I read today that Alex did not talk about is that the bondholder can determine whether the return of capital is in Bitcoin or shares, if not converted. However, if the bondholder does not elect that, then the company can decide whether the return of capital can be in Bitcoin or shares, right? So, there are a lot of different pieces of the puzzle here that make this just a little bit better overall than a euro-denominated bond for the blockchain group. There's going to be no credit risk because they don't have these payments to make. This is infinitely scalable as long as they've got the authorization to do it. We don't have to have specific MNAVs or worry about that when we're doing these things because, again, we don't have to worry about interest payments or anything like that. And then we've reduced currency risk. Now, some people may see that as a bug rather than a feature, but I think that this makes everything very simple. And what's really neat is I think they did the first round of these bonds in March, and that's in the press release, and I just don't want to go back and read it on the fly here. But Adam Back and a few other people have already converted their shares, converted their bonds into shares because they had basically like a 0.70 euro strike price or our conversion price. And you can see here when they wrote this next press release, it was at 2 euros 93. So they were already in the money within a matter of months. And so I think, especially early on, we're going to see a number of people out there who are really going to want to use these Bitcoin denominated bonds for the blockchain group. So far, I've seen no other companies that have Bitcoin treasuries doing the same thing. And because of these, convertible bonds, if you've got a ton of Bitcoin and you're in a different country, if you're Brazilian, if you're Japanese, if you're Chinese, if you're American, you can still go to them and give them the Bitcoin and still have the same rights here that everybody else would have. And he mentioned that basically the company that's the subsidiary that's issuing these bonds is in Luxembourg to take advantage of a lot of the financial laws there that are probably more beneficial to both the company and to bondholders from that perspective there, being another financial hub. So that's pretty much everything that I wanted to go over here today. I hope this video was helpful to try to explain why I think that this is a really neat strategy, why there's extra value here that they are putting onto their balance sheet and basically, adding Bitcoin more quickly as a result. Basically, they're removing coupon payments as a result of this, and they're getting really, really favorable terms. And, the Bitcoin doesn't even have a float or a gap where, if I got 5 million euros yesterday and I had to wait for the wire to clear until today and the Bitcoin price went up 3%, that doesn't matter, right? Because I just put the Bitcoin in and, one Bitcoin is one Bitcoin there. So that's just kind of another cool piece. If you found this video helpful, please please maybe subscribe to my page if you see yourself so inclined. Also, leave comments down. This was a good video. This sucked. Your math is wrong. Anything like that. I'll take whatever critiques you have for me. I'm always trying to just add more value out there to everyone who's looking at these same kind of things. And if there are other videos you'd like me to do, please put those down in the comments as well. Happy to try to take topics and tackle them. It helps me learn more about these things. And I learned a ton today as I was thinking about this video. I'll say that that interview with Alex, I was listening to that 2 hours before I created this video and before I created the spreadsheet. And so it's very, very timely that we're going over all of these things. So thank you for watching. I hope you have a great day wherever you are.